Let's have a look at the bearish count for the S&P 500. So it would be that this would be an A wave here, a B wave here, and a C wave up here. And with that in mind, we would still need to see a move higher up here in this particular case. So this low that we had over here is on the 13th, 14th of October in here. And when we sort of have a look at, let me take you around the block for a spin here, on the 10-year yields here, this top that we've had over here is not exactly the same date, but it's quite close. It's around the 20th, so, or 21st, I think. So it's quite close to that, October low that we've had in the stock market in general. And there's been gold as well. I think it had a low the 26th of September, right through to other lows that started sort of in November, like Bitcoin. But basically those October lows, give or take weeks either side, have been a low for a lot of markets. And this particular market here, as these yields have been dropping here, the first move down here is in 5 waves, so we should have another 5 waves. So we do have 5 waves here. So it is possible for it to push up here, but I don't think that's the case, that it will push up here. I think that it needs to come down further. And the reason for that, if I come to the 30-year yields here, I can see that this little low here is below this one here. So my little A, B, and C correction here, going back to the 10-year yields, would be on track here, even though that this one is above this one here. So the A, the B, and the C coming back up here somewhere and then moving down. So I'm thinking that because they turned around the same dates, and this one needs to come down further, so this would be 1, 2, 3, 4, 5 coming down here. Now I've got this as a wave 3 here and a wave 4 over here for this. Now I kind of like it as a wave 4, but it's not set in stone. The whole move to the upside here from the lows here can be counted as wave 1 or 2, or an A and a B and a C wave up here as well. So even though I've got that here as an A, B, C for the 4th wave, it doesn't mean that it's set in stone. So if we were going to continue as a bull market, then we would want to see, these come down further, down to their sort of target here for that, Yeah, so anyway, I don't know if it's a wave 4 or wave C or wave 3 up here. That's always been a bit of a mystery until I can figure it out. But in the short term, we should be seeing these rates move down here further, and we should see that on the interest, not 30-year yields, but not the notes. Where are we here? Have I lost it here? Have I? Oh, not to worry. Yeah, so I was just looking for the interest rates. But so anyway, this pulling down here further, which seems to be the case, that would allow the stock market to move up further. So that's the only sort of spanner in the works that I can see at the moment is the US dollar. So it's certainly, the US dollar is certainly going to affect the commodities. It'll be interesting to see how it affects the other markets, the indices and so on. Now, I've had this, I could put this as a wave 3 here and go back for a wave 4, but the wave 4 would still be up here at this point. So there is a case for that, but pretty much with the euro US dollar, the cable, the Aussie, the DAX, all of those markets tend to have 5 waves to the upside. So I think it's only fitting to have 5 waves to the downside here as well. Now, we were looking at possibly having a low, coming into place down here. Cut a long story short, but the main point here is that we're seeing that nice sort of move to the upside. I've only got 3 waves to the upside so far in here. I'm not going to go in there right now, but we'll probably get 5 waves coming up a little bit higher, and that will give us a pullback and then another 5. So it's possible to sort of kick back up here for this. So that higher US dollar is certainly going to affect all of the commodities. Right, and obviously commodity stocks to a point as well. How it affects the S&P, we just need to keep a little bit of an eye on it, okay? So, yeah, just they're the 2 sort of main things at this particular point. So this would be the bearish count here, and I can't see, even the US dollar pushing up, I can't see how we can have a top here, because I'd only have to have it as wave 1, 2, 3, 4 and 5 here, but we've got overlapping wave structures here, so it doesn't count very nicely as a sort of finishing. Even if it comes up here further for a wave C of B, then would still need to move higher, and you would expect some sort of equality in terms of size and all the rest of it to the previous structure here anyway, so but anyway, we'll need to be a little bit mindful up here about all of that, and we'll see where the yields are and the dollar is, and we'll see those type of effects. But apart from that, we've been looking at it on the bullish side. And on the bullish side, now we've seen this is 20,000 ticks here. This move down here on Friday, it was on lower volume, so the whole week here has been on higher volume. So if I can have a look at this on the weekly chart, okay, the volume's still okay here, I guess. So we've got increased volume over the previous week here, right? So we're seeing increasing volume through these last 3 weeks here coming up. So that's a good sign for a trend, because if trend, be it up or down, needs increasing volume. On the daily chart here, it's not a very good sign at this point. I'm just going to I'd rather go to the SPX for this. So can I get it volume on it? Well, this one won't give me volume on this one, will it? I'll have to go to the indices here. Just bear with me a second. This SPX should give me volume, yeah. So we can see that this move down here was on lower volume, still high, a lot of volume, but still it was lower compared to the previous bar, which is how I read volume anyway, if you're reading it bar for bar. So if it's down on lower volume, then it's corrective. If it was down on higher volume, then it'd possibly be part of a trend. And then if we look to the weekly chart here for this particular trend, we can see that, we have been increasing volume really from this low here, which is good. Yeah, so that's good. Yeah, so the volume's confirming the price action to the upside. So really, in the bigger picture, as of today, really, as long as the 4,000 holds as support, then the trend can, still to the upside at this point. So it'll be interesting to see how the dollar affects all of this. That's just a little spanner in the works. So on the 20K here, just going back a little bit to here, then we can just start filling in the dots. We're looking for wave 4 to come in here. So we've been looking at from the low here as wave 1 and 2 and 1 and 2 and 1 and 2, and we've got a nice third wave here with 5 waves in it, 1, 2, 3, 4, 5. Don't need to go into for that. So the wave 4 can pull back to the 38.2% retracement level, and then we'll be looking for a wave 5 to the upside. Won't be a big move. It will be here somewhere because of the length of this one here, and then we'll pull back again here, and then we'll push up again here, so we can start filling in those dots here for this as wave 3 here, and 4 over here, and then wave 5 here, and that will be wave 3 at that point. So this is sort of, you know, it's not perfect with the yields, but it's quite close. You know, it's probably a little bit quicker than the yields. Already got that stuff there, but so I don't need that and that. Don't need that, and we can turn this to wave 5 there. Well, that's a bit weird. Why did it do that? Must be the full moon. So it'll be something like this, wave 4 there. We can move this. I know we'll have a lot of problems around this number up here. These wave 4s should lift up a little bit at that point. So that's really what we're looking at. They could probably go up to 4, 5, but we'll get there when we get there. But you can see that based on this and the yields moving down, we've still got further to move to the upside. So we'll stay bullish unless the 4,000 is breached. If we get some strong move down here, then something's wrong at that particular point. But it's difficult to count this up here as being completed at this particular point. And the Nasdaq will be the same as well. So just looking at the Nasdaq here, we've got this as 1, 2, 3, 4, 5 for 1 and 2, 1 and 2, 1 and 2. Nice strong third wave. Looking for the fourth wave in here somewhere. The fifth wave. So we're going to be, you know, playing around the 13,000 here for a while, and we need wave 3 in orange as a minor degree, and then wave 4, and then wave 5 to the upside. So this is the length of wave, you know, 1 here, so we will expect wave 5 to be up here further. So I think we'll just continue to climb, and we'll keep an eye on the big tech stocks. Amazon took a bit of a hit, but all the others are pretty good and stable, and yeah, still need to move to the upside. So I think we can kind of sit on this and continue to go further. And the Russell's much the same as well, same count here. So from wave 2 we've got 1 and 2, and then wave 3, 4 and 5 moving up higher here. This will be a little wave 4, so we've got 1 and 2 and 1 and 2. We've probably got some other trades in here on the 100 tick chart. This is the 20 tick chart, but you know, I know I would have said that, you know, the 2000 is the target for the short-term traders. The longer-term trend traders can pretty much just sort of hang in there with all of this, and we should be moving to the upside. The swing range will be group 1, so 2030 back down to group 2 below this level, so it'll be swinging around here a little bit. Now the Dow Jones, that's in a bit of a different situation. It just really hasn't taken out its previous highs here. It's lagging. Something's dragging it down. I haven't really thought out too much about it, but it hasn't really taken out this high here. It's possible that we can look at this as some sort of A, B and C wave to this particular point. I still think it needs to take out. I think this week we'll see it take out its top over here for that. This little pattern in here, it's not so little, it will be the same as this particular pattern here. If we just go to this on a 100 ticks maybe, this is the same pattern here as this move up here. I suppose we would get it in 5 waves, but as 1, 2, 3, 4, 5, but we've got overlap there. So I think this is an A wave here, a B wave and a C wave here. We could also look at it as 1 and 2 here. That looks quite chirpy at that point. It should be moving up anyway, so but that's that pattern here, whichever way you want to look at it. So it's kind of the same, it's doing the same sort of thing. We could look at this as wave 4 here, and then look at this as one here. Yeah, in some cases, in a lot of the stocks that we looked at, it does count quite nicely up as wave 1 and 2. But in a lot of stocks too, this low has taken out this one here. So it was a bit of a mixed bag between these two here. So I wasn't quite sure, but it doesn't really matter. You know, I mean, with all of these, we look at, you know, group 1 above, which would be 1, 2, 3, and then we look at group 2 below, the 1972 in this case, and the 1965. So that will be its swing range, you know, and yeah, so that will be there. But this particular pattern here is much the same as this pattern here. That's what I'm talking about. So we could look at it as wave 1 here and back for wave 2, but I don't think that's the case. I think we need to treat it like a wave 4. Even though I've got this as an A and a B and a C, I'm just looking at the bearish side because it's the weakest, you know. I mean, it was the strongest. We could probably, let me have a look at the 50K here. So this would be, if we were looking at it as a bearish count, and it's kind of good to do that, you know, especially if you're going long. So with the bearish count, we'll look at this as the A wave here, then an A and a B, and then 5 waves up here for the C wave of B. So that's the only way I can see having a bearish count, and that means that it really needs to stay below that high here. If this high is breached, then this market is bullish. Because as it stands at the moment, we could look at this as, you know, copy this as down for 1 here and back for 2 at this point. I suppose we could go an A wave, a B wave, and a C wave here, just like I was sort of talking about, but we can't really can't take these highs out. So a nice clean break of these would remove any bearish count that we've got in the market for the Dow. But, you know, it's kind of... it reminds me of the European markets, actually, because obviously the sector, the industrials sector, also moved up really strong as well. And, you know, the DAX and the FTSE and the Australian market and the markets that are open to China in a way, they moved up strong. And then when they move up strong, they have to kind of, I don't know if they have to do anything, but they're kind of waiting for the rest of the market. And like the S&P took a while, you know, the S&P is still getting off its low. So the S&P is catching up and these guys are all slowing down, waiting for them in that space. So, yeah, I mean, we could get this as, you know, up for wave 1 here, an A and a B and a C back for 2, and then pushing up 2 in these cases, you know. But the S&P and so on, they're telling me that and, you know, we need to be moving up here further, you know. So I can't see how we've got bearish counts in the market, but, you know, I mean, we've got to keep talking about, you know, if we're going long, we need to know the bearish counts, you know. I mean, obviously there's, you know, fundamental analysis and there's technical analysis, and with the technical analysis, this is just Elliott wave. You know, there's other good technical analysis techniques, and but I prefer this one. The Elliott wave connects all the dots within structures within structures, and so on. And sometimes we don't know what the next outcome will be, and sometimes we do. And when we do know, well, then we act. And it's like this here, even though I don't know the outcome, because we're looking at the bearish count, we know that, well, if this top is taken out, then it's got to be bullish at that point. And especially if it takes out that top, there's no doubt about it at all at that point, because there's no other way you could count this up here. Because you're not going to have this up here as an A wave here, and then a little B wave here, and a little tiny C wave here, and then go down. It's just because there's no relationship between this one and this one. So, yeah. Anyway, just shooting the breeze. Okay. Alrighty. Well, enjoy Monday. Cheers.